Scott Chandler addressed the question about overall trends in the Canadian market, and one of his most poignant observations was about the secondary markets. And again, with the affordability issues crisscrossing the major cities, you're seeing tenants such as Google moving to locations including Kitchener, Waterloo, and those smaller markets, which already have a large student population, are seeing in-migration of people from all over the world for those types of high-tech jobs. So I'm inclined to agree with him that the secondary markets are definitely more dynamic because you're working off a smaller denominator. But I also expect that apartments are very well positioned for the years to come across Canada.
I think the best opportunity in multifamily is really in opportunities where we can create value on an apartment building, taking an old apartment building, renovating it, creating better customer service for the tenants, and creating value through new amenity space, new suites, renovations to this space. It's really to try to create a new apartment from the building unit to the rental. So putting retail in the bottom suites to create a whole new dynamic. And I think it's transforming the old buildings into better buildings in the future.
The best growth opportunities in the multi-res market would be, I think, at the high end of the market. Because new purpose-built rental is still relatively new in Canada, there's opportunities on the tail ends of it. We're currently under construction of a 43-story, 595-unit condo or apartment tower in downtown Toronto. And a lot of the new projects that are opening in Toronto and Vancouver are targeting the higher end of the market, plus $4 plus rents per square foot. I think those are the opportunities in the short term, in the next 24 months. But I think as time goes by, there's going to be more opportunities at other ranges, socioeconomic ranges of the marketplace.
You know, the apartment business is a long-term business, you know? And so it's not a 1 or a 2 year cycle, I think. I think the apartment industry is even if you look at the apartment owners, those people who built apartments in the 50s, 60s, and 70s, they hung on to them for 25, 30 years and they built true generational wealth. And so I think the perspective for apartments is always longer term, right? So the time to build them is now or next year or the year after, but 25 or 30 years down the road, it's just gonna be really a home run investment for you, right? As that mortgage amortizes out, as your rent grows faster than your operating costs, because the expense ratio is 70-30 for expenses to NOI. So, you know, over time, this thing just gets better. We're such a long way to even think about our markets being overbuilt. They're nowhere near it. And it's a barrier to entry market in the major cities. It's a barrier to entry for the amount of capital required. It's also a barrier to entry for the amount of land that's available to buy. So it's a long-term business. I guess that's really what I'm saying.
Again, Toronto and Vancouver are both very active in terms of job growth. So I think the safest place for rental opportunities is in Toronto and Vancouver. However, given how things have gone in Alberta and given how Alberta has seen such a downturn, there may be some opportunity there now at this point in the cycle to take advantage of the Alberta market as it's about to turn around.